nice to see you in the room today. This is Craig at Max Trading. I'm here along with Eusebio. We're looking and hoping for today's U.S. jobs news to give us some really nice price action. If we just had the right crystal ball, we would know, but of course we don't. Like everyone else, we don't know what the numbers will be in the news release, and we don't know how the market will react to those numbers. Sometimes it seems rather strange. But the max charts are ready, and Eusebio will take advantage of whatever the market provides for us today. We appreciate the opportunity to show you how max trading methods take advantage of movement in the markets, and I think even more importantly, how our risk management protects the account balance as we trade. Eusebio will lead us into the charts for this NFP session. I think most of you have probably met him in another webinar, but for some of you, this is your first time, and you will soon discover that Eusebio is a very skilled trader, and you will quickly realize, I believe, that he really enjoys helping his fellow traders. So we're glad that you get to experience this. I hope you'll be able to listen and to watch carefully. And everyone, please feel free to ask questions using the question panel on your GoToWebinar window there. We'll make sure that every question gets an answer. The methods that you are about to see today, all of them are taught in the Max courses, which begin in just a few days now. Or you can choose to begin your training anytime by making use of our videos. We do provide really nice discounts for those who attend our webinars, so those are available to you, and also for those who take time to watch the video playback of the webinar, and I'll post those links for you. Eusebio, I think that's all the preliminaries, and we're ready to get started, and I want to say we really do appreciate you sharing your time with us today, and the microphone is yours.
Thank you very much, Craig. Hello, everyone. Welcome to this open house session with the non-farm payroll. So we will have the news on the non-farm payroll in about 10 minutes now. Let me explain what are my different scenarios. Let me show, first of all, the calendar. So here, so I will focus essentially on the US dollar and on the CAD, because we have two similar non-farm payroll news. So for the US dollar, the non-farm payroll, we have a forecast of 194K, so an important increase, but no change in the employment rate. And so with the non-farm payroll, most of the time, if not almost always, the market is moving when we have these two news in agreement. In order to see the US dollar strengthening, we need to see a big positive deviation in the non-farm employment change, but a negative deviation in the unemployment rate, and vice versa for the US dollar weakening. And so let me show you my scenario here. So for the US dollar, oops, where is my note? Here. So this is my scenario. So if the non-farm payroll comes out with 234K or 244K or better, and the unemployment rate comes at 3.5, 3.6% or less, then normally we should see the US dollar strengthening. If the unemployment non-farm payroll change is 144, 154K or less, and the unemployment rate is worse than the forecast, so 3.8, 3.9 or plus, then we have to consider shorting the US dollar. And we have similar scenario for the CAD. In all the other cases, so the non-farm payroll is what I consider a non-tradable situation, because the movements are sorry, less important and less predictable. So we will have to wait with patience for the numbers, see if we are in one of these scenarios, and then if this is the case, we can consider trading these movements, and I will show you in such a case how the MAX will handle these movements. Now we have to pay attention because with the non-farm payroll we have generally after the news release at 8:30 a.m. 2 minutes later we have the revision of the non-farm payroll itself. So we don't need to rush. We have to take plenty of time and to see what is happening. Moreover, when we have a scenario when the price can make a sustainable and directional movement, in the case of a big surprise, positive or negative, usually the price will move with 3 steps. Let me take my pen and let me explain quickly what these 3 steps are. I will take my pen, I have to change the color. I will take this color here. And so usually let's suppose that we can go long the US dollar. So this means short the euro US dollar, short the pound US dollar. With the news release, if we have a big positive surprise, we should see, first of all, an important spike to the downside. Sometimes we may have also some speculative movement just before the news release. But at the news release, normally, if we have a big positive surprise, we should see the pair like the euro or the pound dollar going down or making a very long bar. Then we will see a retracement in the same bar or some bar later. So we will see a retracement more or less important. And then we will see in the third step the price continuing or resuming the down movement, because with the US dollar strengthening, we should see the euro US dollar going down. And it is this kind of movement we can trade, and vice versa if we have a big negative surprise, so with the 2 conditions I have indicated. Now with the version of the MAX I'm trading, if we have a big positive or negative surprise, we can even sometimes, after the revision, catch a portion of this first spike if we have such a spike, and I will show you how we can do that. So these are the scenario I will follow. So we have just to wait now for the news to be released. Connie, it is not important what it means. In fact, the signal bar is a collection of 3 momentum indicators: a moving average, a stochastic RSI, the STR means the stochastic RSI, and the third one is I don't even remember, the MACD. The MACD. So, okay, it is the stochastic of the RSI. So 3 momentum indicators. And so we use them to have one of the possible confirmations for our entry setups. Now let me show you what we have on the chart. So I use the version of the MAX called the MAX ETF sum. And so we use constant range bar chart with specific size for the range bar. And so we have our 2 lines here in orange and yellow, which are our ETF lines. We have some other indicator which help to pinpoint rather quickly some interesting situations. And then we have our main indicator here on the bottom of the chart, especially this one, which is what we call our bias companion indicator, which tells us in which direction we have to trade. And when the green and red line, which is called the slow bias, is red, we have to trade downward. When it is green, we have to trade upward. And so, and it's indicate very, very nicely the trend we can trade. And of course, sometimes it's not 100% perfect. Accurate, of course, as any technical indicator. For example, in this, let me show, in this area, for example, you see, the trend is still downward, but the price has already begun to go upward. And so we have to deal with that. So this indicates that the price is a bit volatile. And then we have 2 important lines which help to adjust our setup, our stop loss, emergency stop loss, when we have so a trade. And we have also here the corresponding time bar chart, so in parallel of our CRB charts. So the news now is in 3 minutes. and I will use our max trade monitor software to handle any trade I may consider to take or to handle. And so now the two possibilities I have indicated are, first of all, through an entry or an exit setup, an opportunity to open a trade or opportunity to close partially or totally a trade. And so for the entry techniques, we have several types of entry setups. But any entry setup must be validated under three types of conditions. The technical aspect, we want to see our tools on the chart in agreement in a certain way. We want to have also the trade validated under the risk aspect, and we want the trade also to be in agreement with the global context. The global context being made today essentially with the non-farm payroll, of course. If these three conditions are fulfilled when we have an entry setup, then we have a trade. Otherwise, we don't have a trade. The exit setups are conditions when we have to consider to close partially or totally our trade because some risk is appearing for the trade and the risk is becoming too important. And so we have several types of exit technique based on indicators, exit technique based on pure price action or a combination of both, based on timing aspect, timing during the day, based on movement invalidation or trend exhaustion. And so we have several categories of exit setups in order to try pinpointing as accurately as possible our exits. So an exit setup is never a way to predict that the price must reverse. We do not want to predict what the price should do or could do. We want to quantify at some moment when the risk we have on the trade becomes too much important, forcing us to reduce that risk. And to reduce that risk, we have essentially two mechanisms. First of all, reducing the size of our trade, and then tightening the stop loss on the trade, as I will have most probably the opportunity to illustrate. If we don't have the appropriate conditions for a trade, I will force a trade. Forcing a trade is a trade we should not take normally because the conditions are not fulfilled. But I will take one on any of the pairs we have just to show you how the trade risk management helps to fine-tune the way to handle the risk on the trade. So the news is due now in a few seconds. Let me check the calendar. So we will have to wait until it is released. You can see that at the moment the news is released, we have the price moving on many charts. So we have 250K for the non-farm payroll. 250K, this means that we are for the moment in this context. So we need now to check for the unemployment rate. And so if it is less than 3.7%, no, it is 3.7%. So the unemployment rate is not in agreement. So we are not in a proper conditions to have sustainable and directional movement. For the CAD, let's check for the CAD. For the CAD, we have 11.2K. So we are not in a proper conditions, and the unemployment rate is better, but we don't have everything in agreement. So for me, it's a non-tradable situation for the non-farm payroll. So, however, let's wait for the revision. We don't have the number of the revision, and let's see how we can force a trade in order to illustrate the trade risk management we use with the MAX. So we have a good number on the non-farm payroll, but not on the unemployment rate, unfortunately. So will we see the euro-US dollar or the pound-US dollar going downward? And as you can see, this is not so obvious, simply because the two numbers are not in agreement. And so we will follow simply the trend we are seeing on our charts. But let's wait for the revision in a few seconds now. So the revision has been released, so there is no special change in the behavior of the market, and so we can see some opportunities appearing perhaps soon in the euro-US dollar if the trend change direction, and we have to wait for an appropriate setup to go short on the pound CAD, on the pound yen, or if the trend reverse, and we have to wait for a long setup in the pound Aussie. So we have to wait for an appropriate setup for the moment. So, and let's have a quick look to the pound Kiwi, because I like also often to trade the pound Kiwi, which is very volatile. Okay, let's try to see with the euro-US dollar. Here we have some setups to the downside appearing. Let me load the max trade monitor on this pair. And I will quickly re-explain what it means. Let me adjust my stop loss. So let's wait for an entry setup here on the euro-US dollar. And let's consider also the pound yen or the pound CAD. We have the choice. I will consider the pound yen. So we are still waiting for an appropriate setup. Okay, this may be an entry setup on the pound yen. Now we have an appropriate setup, but I need to define our entry price levels. And I hope it will not be too late. So I will make my entry at 75.09. So here, if the price comes back, and you will see how we do. So now I open a short trade. The stop loss is around 20 pips. So the trade has been opened now. And so if you want to see the size, and we have also an entry setup here on the euro-yen, on the euro-US dollar, sorry, and the entry could be here at 21.1. No, 18. I have a new screen, so 21.1. Yeah, 21.1. I'm a bit too late. So, sorry, it is here. 18.8, 18.8, 18.9. So, let's make a sell here. The stop loss is, okay, it's okay, a bit large, but no problem. So, I have now two short trades on the euro-US dollar and on the pound yen. And so on these panels here, what we have is or are informations about each trade. In the column symbol of the euro-US dollar panel, we have the numbers of the euro-US dollar, and on the other panel of the pound yen. And then the global columns represent the total of the two trade, the result for the two trades. So if you want to see the size of the two trades, we can open the terminal panel, and so we can see here that for the pound yen the size of the trade is 62 microlots and 44 microlots for the euro-US dollar. And so now the price is moving nicely in favor of the euro-US dollar. We begin to see some profits here, and we can tighten the stop loss whenever this is possible, in fact, and I'm going to show you how we do that. So here we have the last closed candle, and we have that line. We use that line to help adjust our stop loss, keeping the stop loss a few pips above that line somewhere in this area. And you will see how the risk will be reduced here. So it is 0.99%. And so I will reduce here the stop loss in this area, and you see that the stop loss, the risk has been reduced by half approximately. And for the euro-yen, the pound-yen, sorry, I can also tighten a little bit the stop loss, and I will set the, let me draw a vertical line on the last close candle. No, not yet, the price has not moved a lot, but I can tighten the stop loss a little bit on this area, reducing by approximately 1/4 the size of the stop loss. Now, I have to consider whenever we have an exit setup. Normally, with the euro-US dollar, we have already an exit setup triggering, because we have several rules telling us when we have an exit setup, and I see that on that candle we have one. But in my trading process, I always take a first MX, and MX is a minor close, or a momentum close, only if my profit is large enough. A profit large enough for me means the following point. Let me widen this chart. My stop loss has a size of here 13.7 pips, and a profit large enough for me is a profit at least minimum half of that. So this means minimum 7 pips, and so 7 pips from my entry plus the spread, and the spread is 2-3 pipettes, so let's say 7 pips. 7 pips will be in this area, a little bit below that orange line, so my first profit will be around this area. And similarly for the pound yen. And so this is a discretionary decision I take to bank or to reduce the risk of my trade only if I have a profit large enough. And of course the risk of that is, so I have 16 pips for the pound yen with a spread of, let's say, 1 pip, so 17, half of that is 8.5. 8.5 will be right on this level. So the risk of that discretionary decision is, of course, to have the price going against me and hitting my stop loss, in which case I will be forced to close my entire trade on this stop loss. This is possible when the risk on the trade is small, very small. And personally, I never take a risk larger than 0.5% or 1% per trade. And you can see that with the stop loss, which has been already reduced, my global risk on these two trades is only minus 1.3%. So I don't care if I take a loss on these two stop losses should the price continue to go against me. So this happens, of course. We don't have a 100% winning rate. We have a winning rate of around 70-75%. And with such a winning rate, we can have losing streaks of 4, 5, 6, 7 losing trades in a row until we get the appropriate winning trade, recovering all the losses, or a series of winning trades recovering all the losses. But the main point is at any moment when we can reduce the risk, we do that. And you have seen already an opportunity here with the price accelerating for a few moments in our favor. So I have reduced my risk on the stop loss, so reducing also the maximum potential loss should the trade be closed with a loss. So and so as long as the trade is not closed, of course, there is always a possibility for the price to come back. Now, these two trades were not in the appropriate conditions, okay, because the context was not appropriate for the non-farm payroll. There were also other technical considerations showing that these two trades were extremely risky, but I want to show you the trade risk management, even in the case of losing trades. So we are almost, okay, we are out with the euro-US dollar here, okay, and so making here a small loss of 0.5%, but we are still in with the pound yen. And so when we will get another entry setup, I will take another trade on the euro-US dollar. And so for you Maxers who are also in the room, you can see that the euro US dollar, when I have made the entry, so in that proximity here, we were close to the home base. And so, but I'm not checking our time bar chart here, so I was not able to see that the price was flirting with the home base. But this shows also that with the max ETF sum, we can trade the price movement independently of the time bar chart. It doesn't matter on the long-term perspective, we have similar results. And so now that the trade is closed on the euro US dollar, I can reset the numbers here on the euro US dollar panel. And when I will get another entry setup, so I will take another trade. You see on the pound yen, I have tightened my stop loss a little too fast, so I have been stopped out. This sometimes happens, of course. But anyway, if we have another opportunity, I will take that opportunity. And so when we have opened a trade, so the first priority of a max trader is never to focus on the result itself, but always on the risk. On this panel, we have two lines which are extremely important. The first line is the ESL result. The ESL means emergency stop loss. And the x-axis profit. The x-axis profit is the result made on the trade, positive or negative, should the trade be closed on the present price at any moment, and ESL on the stop loss. It is called emergency stop loss because its aim is to protect the account, of course the trade also, but essentially the account when we have, for example, any incident, such an internet connection problem or a platform problem, with the consequence that we cannot observe our trade. We are blind with our trade. And so in this case, if the price goes against the trade and hit the stop loss, at least we control the maximum loss we have on the trade. Edward, the offline chart is a chart which contains type of chart which is not standard with MetaTrader. For example, if you take the 5 minute chart, so here, the 5 minute chart, so this is a normal chart, okay. From this chart, we can build what we call an offline chart. It may be a tick chart, it may be a volume chart, it may be, not a volume chart in the Forex, and with MetaTrader it's not possible, but it may be a tick chart, it may be a Renko bar chart, it may be a constant range bar chart, and in such a case, of course, the chart is updated in real time, but it is called an offline chart, okay? You can see it is updated in live conditions, so. And we have a tool which builds that offline chart from the data feed we receive from the broker. So let me prepare here my stop loss. So this candle may be possibly an entry setup bar. If it closes as a red candle, yes, it is. So I have the opportunity to take another short trade at 24.1. So in this area, and my stop loss size will be 15 pips. I can take it a little smaller. Yeah, we have a valid entry setup. So click, we have the price having touched my level here. And you can see that as soon as the price has moved and covered the spread, so the x-axis profit line becomes green. But it must stay green, of course. So in this example, my stop loss size is, let's say, 14 pips. So my minimum profit level will be at 7 pips. So somewhere in this area. And I'm taking short trade because my slow bias is red. And if it must turn to green, I will take long trades. Here I can reduce a little bit my stop loss on the pound yen. Yeah, here at that level, reducing a little bit the risk on the pair. The price seems to be rather volatile, so I do not want to tighten my stop loss too close to the price. I will still tighten it a little bit, but being a little more flexible, taking 5 or 6 pips. So in this area. Yeah, Edward, we consider the New York Open because, the New York Open is already made. The New York Open has been made 52 minutes ago, okay? Don't forget, here in Europe, we have switched to the daily 7 time switch has been made last weekend. It will be made this weekend in USA, and US has already opened. So we have a risk to be stopped out here on the pound yen, but with a very small loss. Not yet. Yeah, when we are in a trade, we have two types of scenario. When we are approaching an important market open, maybe the US Open or the London Open, for example. Okay, we are stopped out here. So let's make a reset of these numbers. And so we have two types of situation. Either we have an open trade or not. If we have an open trade and we are facing a market open, so we may consider reducing the risk we have on the pair. If we are far away from the US, from the market open, at least 1 hour, and we have an entry setup, then we can consider opening the trade. But there is no problem to open a trade or to be in a trade with the US Open. So, no, Connie, the US market is already opened. It has opened 54 minutes ago. For the Forex, I mean, and also for the futures market, okay? Yeah, Dan, you are right. The pound card looks good with long trades, of course. But you know, I cannot make some comments, check the chart closely and make some comments on several potential trades. So I have to make a choice. And so let me put my stop loss a little closer just to prepare the next opportunity. The stock market, Connie. Yeah, indeed, the stock market opens in half an hour now, indeed. Approximately in half an hour, in 35 minutes. And so the Wall Street Open has sometimes an influence also in the market, but it's not an important influence. The influence it may have is sometimes an increase in the volatility, which may be good, which may be problematic, but not necessarily a condition not to open a trade. But yes, the stock market opening has an impact also in the currencies market. But I don't pay especially attention for the Wall Street Open when I have to consider a trade to open or to close. I simply pay attention for the increase of volatility. The increase of volatility is not always, but it happens sometimes depending on the more global market conditions. So you see, when we don't have a good set of conditions for the non-farm payroll, we have what we call, in fact, more choppy market conditions. So the price moves in a more erratic way before the big boys decide the direction to have in the market. But in the meantime, as you can see, the euro-US dollar is moving, so in our favor, in our direction. And so just to illustrate here the trade risk management, normally I should take a profit, so on this level or below this level. This is not a target profit. What I mean is, if we have an exit setup, and this exit setup gives me an exit on this level or below this level, I have to take it. But because we are also limited in our session, so in the time for the session, if the price reaches this level, I will take a profit on this level. Just to show how these numbers will evolve by reducing the size of the trade. And in the meantime, I can reduce a little bit my stop loss. So my risk is 0.8%. I can reduce the stop loss around, I will reduce it just above our home base here. And you will see how this will reduce the risk at 0.5%. And well, I will consider banking some profit. If the price reaches that level, banking some profit on this level or below, you will see normally that the risk will be reduced even further to approximately 0.25% if I'm correct. Or perhaps to break even. No, to break even most probably. And on this level I should make also for the spread, because I have taken the spread into account, but we have on this platform very small spread. These numbers are not pips, it is not 1 pips spread, they are pipettes, so we have a very tiny spread here. And we may have another short setup if the price moves appropriately. Yep. The conditions will be fulfilled. Sorry, my stop loss should be there, and my entry, I will have to calculate it later. Yeah, pay attention then, because the market is somewhat choppy. So if you are in the pound card position, so pay attention. Ah, you are out. You are already out. That's a good point. That's a good point, indeed. Okay. The price is on my level. As soon as it will go below, I will make an MX and observe this number, 0.54%. I will close half of the trade. Okay. And you will see when the number will be updated. So here, I will come back to that in a moment. Let me check here, because I think we have an entry set up on the pound yen, 76.5. With a stop loss of 12 pips, perhaps a little too small. Okay, now let me explain here this number here. So we have closed half of the trade. Let me show the terminal panel account history, we have closed half of the trade, so 0.4 mini lots with some profits, and so that's strange. So the open risk is 0.27%. Perhaps I have not reset the number, so this takes into account the previous loss. Yeah, most probably. And now, if I close the trade now, so we will make 0.5, 0.6% profit. So on the remaining open unit, I have only 1/4% risk on that trade, and I can continue to adjust further my stop loss, now almost at break even for the second unit, and you can see that I'm beginning to lock some profits on this trade. So this trade now becomes a risk-free trade, and so what I can do to close that trade, I can either wait for an exit setup, or I can wait for the trend to reverse. And you can see also on a global perspective that I'm also recovering my previous loss, in fact. And so in order to continue looking more results on this trade, there was still a small risk on the second unit, so the second half of the trade, but I'm positive on the trade globally. So I will continue to tighten the stop loss whenever I will have that opportunity. So I can tighten it a little bit to this level here, almost setting my second unit at break even. So as you can see here, I have another entry set up here, which is not valid, so I have to wait. All the conditions are not fulfilled. And by the way, here we had this candle was an exit setup bar. I would have to make an MX or an exit here. So this level where I have made my first MX was not a bad level, so by the way. So no entry yet in the pound yen. We are still in the pound, in the euro US dollar. And of course, the risk here, the open risk is the risk we have on the second unit. In fact, whenever we open a trade, we consider the trade is made of 2 units. And when I make an MX, I close 1 unit. So we still have a small risk on the second unit because the stop loss is above my entry level. But, so, no, now the trend is reversing, so I have to wait for a long setup. So what I was explaining here. So the risk is still present on the second unit, but it is a very small risk because the stop loss is above the entry price level. But globally, so the trade is a sure profitable trade. And now with the last close candle here, I can tighten, I think, a little bit my stop loss. Yeah, right at break even here. And you will see let's tighten it just below the entry price level. Okay, now you can see that the risk is very a tiny one because there is still the spread to cover, of course. But very soon, if the price continues to go down, I will be able to fine-tune my stop loss and to let this risk disappear. But I'm looking more profits. It's a tiny profit because the movements are small movement. And again, the price in this area on the 5-minute time frame is flirting with our home base. So if I take the 5-minute chart here, you can see that the price is facing our home base, which can be an important resistance to the downside. So the price can possibly bounce off from that level. So to go along with the pound yen, we have to wait for the appropriate conditions. So this may be possibly a long entry setup if the price moves upward and this candle closes as a blue candle. On this panel, you have other information. You have, for example, the floating result on the open trade, the closed profit on the closed units in percentage or in pips. So you have the same information in percentages or in pips, the number of open units. Yeah, indeed, we have, no, we don't have a TP. Here we don't have a TP, Guan. We have one here, okay? But as I have said, we have either the possibility to close the trade either on an exit setup, a TP is an exit setup, of course, or when the trend will reverse. And here I make the choice to wait for the trend to reverse in order to see if the price will go further. Okay, further to the downside. Afterwards, we have no risk at all in that the trade is a sure profitable trade. So we can wait for the trend to reverse. But you are right, we had here a TP pattern. Okay? And so here we have now no, the setup is yes is good enough. So my stop loss should be, but the price is extremely choppy, and on the 5-minute time frame, I don't like that type of behavior. The price is too choppy now, and when we are in a choppy mode, so we have either the choice to skip the trade or to take it, but we have to handle it in a very, very careful way. Let me focus on the euro-US dollar here. You can see as long as these lines here, red or magenta line, stays flat, I cannot adjust further my stop loss. Now, this slow bias indicator, which is green for the moment, showing that the trend is reversing to the upside, can still reverse to red. And so, in fact, it has turned from red to green at 16. And so we have, in fact, half an hour to have the confirmation that the trend is reversing. Within the first half hour, 30 minutes in this case, this line, which is green, can reverse back to red. This is not repainting. It is not repainting. This is simply because this indicator represents what is happening in the 30-minute time frame. And so if the trends has not confirmed its reversal in the 30-minute time frame, and so it can, and if the price resumes the down movement, this line can become red, sorry, again, okay? And when these movements are really choppy, so it's more challenging to have good trade. What is a choppy mode? In fact, within the MAX, we define several types of price modes. Price modes represent the conditions under which the price of one pair is moving. We have as mode two important price modes type. We have local price modes and we have global price modes. In the local price modes, we make the distinction between a trend mode, a counter-trend mode, and a consolidation zone mode. And for the global price mode, we have the choppy mode, and we have what we call a special case, the spaghetti zone. In a spaghetti zone, we have never a valid entry setup. This is typically a choppy mode. And to recognize a choppy mode, we need several bars to recognize it. A trend mode, a counter-trend mode, a concession zone mode. So a local price mode is recognized within 1 or 2 bars. This is why it is called a local price mode. For example, here we have, in fact, the price beginning to enter into a counter-trend mode. But if the price comes back, we may have possibly a concession zone mode or a trend mode. You see the trend has reversed to red here, and in fact this is an entry setup to go short. It is even a valid one, and I'm tempted to take it, so with a stop loss of approximately 13 pips, and my entry should be at 74.8. So here, if the price comes back here, I may take that short trade, but we are in a choppy mode. So let's take it. And I have taken it in a very, in a rather aggressive way. And very soon I will be able to begin to tighten the stop loss here. And you can see on the pound yen here, so the risk is 1%, and so how the price, the result is evolving. And so here my stop loss size was 13.4 pips, let's say 14. Half of that will be 7 pips. 7 pips will be approximately here at 167. Oops. What am I doing here? 7. Oh, I have adjusted the stop loss. That's not good. So 7 pips will be right here. And I can begin to tighten a little bit my stop loss, for example here, just a little bit. Reducing a little bit the risk on the trade. And if the price comes back to this level, I will make a first MX, and you will see normally how the risk will be reduced. Normally, we don't take the profit on that level. We need to have an exit setup giving an exit level on or below that level. But just for illustrate the trade risk management, I will make an MX now. Okay, now. The MX has been made, and you can see how the risk has been reduced to not very far from break even. So, of course, I still have a risk on the second unit, but the profit close on the first unit is large enough to reduce, importantly, the risk on the second unit. And I check with each candle if I can tighten further my stop loss. I can do that here in this area, reducing further the risk on this pair, which becomes virtually almost break-even. This is the result, minus 0.10% on this pound yen pair, should the price reverse quickly now and hit the stop loss. This means that most probably on the next adjustment of my stop loss, I will be break-even or risk-free with that trade too. as I am with the euro US dollar already. And globally, the two trades are already looking a positive result. Of course, this movement on the pound yen is difficult for the maxers who are in the room. You can see that the price is flirting with the home base channel. And as long as the price does not succeed to cross our home base channel, so the price has always the possibility to bounce off from that home base channel, and to reverse. But the trend is to the downside. I'm not able yet to fine-tune my stop loss, unfortunately, on the euro US dollar. A little bit too early to adjust it, and so you can see, in fact, that when we have some volatility, well, I'm looking where are our next max price levels. We are far enough from the max price level, so here we have 20 pips. Here we have 39, almost 40 pips, so there is no problem at all for this movement. So when we have some volatility in the price movement, and we take a trade with our max sum, ETF sum level, so it is not so difficult to catch some fast profits. We may face some losing trades, of course, but these losses are always small losses, which may be very quickly recovered with one winning trade or two winning trades. And so it's not so difficult to make a minimum profit for the day. Do you know, for example, that if you are able to make on average 0.5% profit every day, and you trade every day of the year, which is not so obvious, okay? You need to be almost a full-time trader to do that. But if you are able to make on average 0.5% profit per day trading every day of the year without making any withdrawal, at the end of the year, by the compounding process of your result, if you compound your profits, you will multiply your account by 3. If you are able to make a 1% profit on your account every day on average, and so this means that you could stop trading whenever you get your result, your average result you need. So if you are able to make on average 1% per day, at the end of the year, you multiply by the compound effect, you multiply your account by 10, which is really amazing. This is an important growth of your trading account when you are consistent enough to reach such kind of results. But for that, you need to have a very, very strict trade risk management as we have with the max. So for example, here we can tighten the stop loss, for example, on this level. So I will tighten it a little further. And now you can see that on the euro US dollar, I'm looking more profits. And of course, I'm looking more profit on the global position now. And I'm not yet able to adjust the stop loss on the pound yen, but this will be made rather soon if the price succeeds to go a little further to the downside. But anyway, whenever I have the opportunity to tighten my stop loss, I do it without any problem, tightening more and more profits, or looking more and more profits. And as you can see, we can consider reducing the risk on the trade virtually for every bar, Here I'm right on this level, so no question to tighten my stop loss for the moment. So this line needs to be lower. Now I can tighten a little bit my stop loss on the euro US dollar. You can see how easy it is with our max trade monitor. We have one click button to open a trade, to close half of the trade, to close the remaining rest of the trade. And we have, even if we make scale-ins, I don't have the opportunity to show you scale-ins in 2 hours here, but if we have the opportunity to make scale-ins, we have only one global stop loss, and we can adjust the stop loss manually. So by simply clicking on it and moving it with the mouse. Really easy to handle the trade, and when we have these two numbers under our eyes, so the ESL result and the XXX profit, it's really, really easy to handle the trade and to see how we can reduce that risk progressively. So yeah, the euro US dollar has broken the home base channel, and for the euro yen, it's reaching it is on the upper level of the home base channel, so with a good chance to reach the home base itself. Let's see what will happen. Okay, I can still further reduce my risk on this position, so around this level, looking more profit. On the pound yen, not yet. We have to be patient, or perhaps now the bar has closed. Let me check. Yeah, we can here reduce it a little bit. I use that vertical line to align on the last closed candle to see where our lines to adjust the stop loss are located in order to be able to adjust the stop loss on the right spot. Here you can see now we are looking more than 0.5% profit on the euro US dollar and almost 0.5% profit for the two positions. But if I close the two trades now, I will make more than 1% profits. And so this shows also one important thing. Trading is also considered as a psychological game. And some traders may fear to stay in their trade when they see the price pulling back. And so, and the reason is when the price is pulling back, or when the price is going against the trade, a portion of the profit is disappearing. And this may be scary for some traders because they don't see exactly what is happening in terms of numbers. When we have these, at least these two numbers under our eyes, even when we are seeing such a pullback, we are not afraid at all because we see that we are out of risk. And we are looking more and more profit. I never focus on the XXX profit. I always focus on the ESL result. And so when we have these exact numbers, it's easier to handle the trade. Now I can, in fact, tighten the stop loss on the pound yen. I can tighten it around this level here. And you can see that now I am even out of risk on the remaining open position with the pound yen. And if I close the trade now, I will make more than 1% profit. I'm looking, so more than 0.5% profit on the stop loss on these two positions, but more than 1% if I close the trade now. So we have also a system to note the chart. I'm not illustrating it here today, but we have a system of convention notations to annotate the chart in such a way that once the trade is closed, we can make a screenshot of the chart to save the history of the trade, all the details of the trade, in such a way that later we can always make a post-review of the trade and check if the trade has been handled correctly with the rules of the MAX. It's always important to be able to post-check the trade in order to pinpoint the errors we have made, in order to try to correct these errors in the future. This is an improvement process we need to have. So in our trading process, in such a way to become more and more accurate in our position or in our decision when we have to open a trade, when we have to close a trade. We may have a potential trend reversal here. There is a possibility because we have a divergence in our fast bias. And so if we have a long entry setup, I will close the trade on the pound yen. I can tighten a little bit the stop loss on the euro US dollar, looking even more profits. Not yet on the pound yet. No, I cannot. But I will consider to close that trade here should a long entry setup appear. In fact, we have a trend reversal in two cases, either when our slow bias changes from red to green, or as it is the case for the moment, if this fast bias, the second line in blue and brown is called the fast bias, is showing a divergence with the price, which is the case. You see then how it was challenging to continue trading with the card, the pound card. Not obvious movement for the moment on the pound card. So Sean is asking, so if you trade 8 hours, how many hours does it take to take you each day or week to go back and review all your trades? Or Sean, it depends. When I trade with the max ETF sum, I have between 4 and 10 trades per day. Okay, and so I check my trades every day, with some exception, but every day I check my trade. And so going back through 4 to 10 trades, it takes me just a few minutes. It takes me a few minutes. Because the errors I can possibly make, of course, I'm not showing you the complete template we are using here on the chart. We have a template with more tools. And so what happens sometimes, because we have to take fast decision in some circumstances, I may miss an exit technique which would have helped me to make an earlier exit. And this is my most frequent errors when I make an error. I still make errors myself because trading is always complex. And so this is the main point I'm checking. So, okay. The divergence was here, Guan. It was here the divergence. This is a new platform I have installed recently. In fact, I have a new environment and I still need to get accustomed with that platform. with my new environment. So we have the divergence here. So we have lower lows in the price, higher lows in the fast bias. Okay? Okay, go on. I still cannot adjust my stop loss in the euro US dollar, but I can certainly do it in the pound yen, approximately here. So looking more profit. And now the pound yen is facing the home base. It is inside the home base channel, and so facing the home base. On another PC, I have my chart with my complete template. And now the divergence has been invalidated. So we are no longer in the context of a potential ETF trend reversal with the divergence in the fast bias, but we may have an ETF trend reversal with the slow bias. And I can still further tighten a little bit my stop loss in this area. And the broker was to give me a quote here, a tick. Now, Sean, to complete my answer, I don't necessarily trade 8 hours. Okay, my stop loss has been adjusted. So this one will disappear. And so you see how the numbers are evolving now, looking 0.71% profits. I don't necessarily trade 8 hours, okay, because of course I begin to check my chart for the Frankfurt Open, but sometimes I close my day way before the Frankfurt close. So it depends on the result I have. It depends if I have already closed my trades and when an entry setup comes. For example, if an entry setup appears after the Wall Street Open, usually I will not take it because it's a little bit too late. And so I may have a shorter day trading session. So we have another divergence appearing here in our fast bias. We have lower lows in the price, higher lows in the fast bias. And so if I get a long entry setup, I will consider to close that trade. So this candle could be an entry setup to go long. It must close as a blue candle, giving us then an entry to go long. I will not take that entry to go long because of the global context today's, but I will close that trade. And if the price resumes the down movement, of course, I will keep my short trade. I cannot adjust further my stop loss on the euro US dollar because this line is flat, stays flat, but I can certainly, no, not yet on the pound yen. Just 1 pips perhaps that way, looking a little more profit. And you can see that the trade risk management is a fight between you and the market, bar by bar, pips by pips, percent by percent. So even if I can tighten my stop loss by 1 pip, I will do that. I will do that. 1 pip is 1 pip. Now, of course, the number of trades you can make during a day depends on the time frame you are trading. If you trade the 5-minute time frame, you may have with the max ETF sum at least between 4 and 10 trades per day. You may trade also the 15-minute time frame. The 15-minute time frame is a nice time frame to trade rather comfortably with the max with the max ETF standard or the max ETF sum, and so you will have less opportunity to open trade. So here we have an entry setup, and so my exit will be here at 7.3. So on this level approximately, let me check, 71.3. 71.3. So if the price comes back on this level, I will close this trade on the pound yen, because this is a setup to go long, even if I don't take the long trade. And I still cannot adjust my stop loss. With that next red candle, if the candle closes as red candle, I will be able to tighten a little bit my stop loss, but not for the moment, and certainly not on the pound yen for the moment. Okay, here on the pound yen, on the pound US dollar, I can tighten a little bit my stop loss around this area. And still nothing on the pound yen. You see, I'm looking more and more profit on my two positions. So I have still a small risk on the second unit on my pound yen pair because the stop loss is above the entry, but I'm beginning to lock profits on the pound yen. The price has not moved a lot, but enough to lock some, even a tiny profits. So this is again an entry setup. This is what we call, let me check, an ETF safe and perfect mode. And so if the price will reach that level here at 68.8, I will close this short trade. And when you see this down white arrow, if this still exists on the chart and this candle closes as a red candle, so this will invalidate the long entry setup. Not yet, ready to make an XXX here. We are flirting with the exit level, which is not a surprise on our 5-minute time chart. The price is in fact flirting with the home base channel. It has a tendency to reject it. So close the trade here, closing the pound yen trade with a tiny profit. And we are still in the euro US dollar here. And so this is a way to close the trade. So when the trend reverses, we have never a guarantee that when the trend reversal appears, that the price will indeed continue in the direction of the new trend. But there are other ways to make the exit. Okay, so for example, a very dynamic exit technique would have been to make an exit in this level here. And so we have several alternative choices as max trader we have in order to handle the close of the trade, the final close of the trade. So here what we are seeing for the moment on the pound, on the euro US dollar, is the price is ranging. Okay, the price is ranging, and one way to make an exit when the price is ranging and provided it continue to range is to consider the support and the resistance level of this range. So we have what seems to be a clear support in this area. I don't need to be exactly accurate in the way to draw. Sometimes we have to fight with MetaTrader to handle these objects. So we have a support level here. We can always discuss how to draw a support level and a resistance level, of course, and we have a resistance level most probably in this area. And so an alternative way to consider the exit of this trade is if the price rejects that support level. So if the price comes back to that support level and then bounce off from that level, we can make our XXX on that level. So and we call such a situation a rejection of a level. We have several types of levels rejection. So if the price crosses that level, we will stay on that trade. But this is one way to make an exit technique. Another possibility to wait for the exit of this trade is considering that with the euro US dollar we are in a true trend situation, is to wait around the Frankfurt and the London close. And so because we are in a true trend environment with the euro US dollar, there will be a 75% probability for that trade to close or to exhaust, for that trend to exhaust around the Frankfurt and the London close. And in the meantime, I always check if I can close, tighten closer my stop loss. You see here, I could have made an exit in this area, but I'm still waiting for the trend. So should I made my exit in this area, I would have closed a better profit, of course, on the euro US dollar. So we have several alternative ways to close a trade, and so the max trader has to define his or her own alternative way to close to make the final close of the trade, which is part, of course, of their trading plan. So each trader must define the trading plan. He or she will use the trading plan, will define the trading process used by the trader. But we still have around half an hour, a little less than half an hour now. So let's see if the price will resume the downtrend, or if we have a trend reversal, of course. What is interesting with the euro US dollar is the price now is facing to the upside our home base channel in the 5-minute time frame. The lower band of the home base channel is approximately in this level. So will this level behave as a resistance level to the upside, and will the price bounce off from that level? No, Guan, the trailing wheels are never support or resistance area. the trailing wheels is used as a volatility condition for an entry setup which corresponds to the safe and perfect mode and to the re-entry setup. Okay? No, Gwen, I don't use the trailing wheels as a potential level of. Oh, when you mean to draw the resistance level, yeah, of course, it depends. It depends, Gwen, if you have to consider an entry or an exit. If you have to consider an entry setup, of course, if you are not at the beginning of a new trend, the trailing wheel will be important to draw the support or the resistance level. Now, if you consider an exit setup, and here I was considering the possibility for an exit as close as possible to the support level. This is something else. I have drawn that resistance level just to figure out the range, the price inside which the price was moving. Okay? And by the way, you can see that I don't use the trailing wheels on my chart here. I have not drawn the trailing wheels on my chart. Okay, here we have what we call the movement invalidation, and so here I will close that trade in this area before the price reaches the stop loss. So yeah, this level is a good one. I will close the trade if the price reaches this level, looking some profits here. Okay, ready, close. Okay, the trade on the euro-US dollar is closed, and so you can see now the result of the euro-US dollar and so the global position. Okay? So when we have what we call a movement invalidation, the movement invalidation is also an exit technique. And so some exit techniques allows to make an earlier exit, some other a later exit. And so you could say, yes, but if you make an earlier exit, your result will be better. The problem is we never know how far the price can go when it is trending. We never know how far the price can go when it is pulling back. And so we have as a trader to make a choice of our exit tactics. And this is defined in the trading plan. Okay? Well, so any questions about what I have presented today with these 3 trades I have illustrated so? Any questions? So just to recap, so the conditions were not appropriate to see nice directional and sustainable movement with the non-farm payroll, because the unemployment rate and the non-farm payroll itself were not in agreement. We need to see them in agreement to see important movement, but I wanted to show you by forcing a trade. Forcing a trade is a trade we should normally not take because the conditions are not appropriate. So I have forced some trade just to show you how the trade risk management approach we have may either minimize the loss when we have a losing trade or still catch some profits, interesting profit, when we have a winning trade. And I have tried to illustrate it almost bar by bar, especially how to take some profits by closing 1 unit or half of the trade and to adjust regularly our stop loss bar after bar in order to progressively reduce the remaining risk on our open position until we were in a risk-free situation and progressively then looking more profit on the trade. Any questions about what I have illustrated today? Oh, thanks, Dan. Any questions? In the case of the pound yen here, so we will have a new short setup should the trend reverse, the slope bias reverse from green to red, or if we see a divergence in the fast bias, which is not the case, by the way, for the moment. So, and we still have some time potential to consider additional trades, of course, but closer we will be to the Frankfurt close, less interesting the trade will be, because most of the action happens during the London session. So we have to trade when the opportunities are there. We cannot follow the market. So, oh, thanks, Rodolfo. Bye, Marvin. Bye. Thank Sam. Oh, you have to wait for the winner of the Max ETF primer course. But this does not apply to the Maxers. And so just to help you, let me describe some point I want to explain. You may have for free some information you can use in your trading approach. So you have the Forex Factory calendar, of course, but not all the news are necessarily important. What we have made in our website, maxtradingsystem.com/newswatch, is every week we update, in fact, our own calendar, and we consider only the news which are really important. For example, today, the two only important news were the non-farm payroll on the US dollar and the non-farm payroll on the CAD. And we had also the trade balance. By the way, the trade balance has given, let's see what it has given. You see, no big surprise, no deviation at all. So no reason for the price to move. And so what we do is every week we establish the list of the news which are really important, and we indicate as major the important news, because you will see sometimes major, sometimes monitor. A news which is indicated as monitor is a news which can simply create additional volatility, but not a reason to step aside. So major, if we have a big surprise, will create movement. And so you have on the right side of the label major, sometimes the notation H4+. This means that in the case of a news release with a big surprise, if there is the notation H4+, the impact will also be in the higher time frame, H4 and higher. In the absence of H4+, the impact will be only on the small time frame, from the 1 minute time frame up to the 1 hour time frame. And so we will have way less news to really observe. At the top of this page, we have also some geopolitical elements or events to pay attention. It's clear that for the moment we have to check carefully what is happening in Germany, and this is accelerating, in fact, and we have to pay attention what is happening with Italy. And we have to still pay attention to the Brexit. Whenever we have someone talking about the Brexit, positively or negatively, we have the pound pairs moving, sometimes in a funny way. Below this calendar, this max calendar, we establish every week the top 10 list pair, which are the pairs which most of the time moves the most. The pound yen is, for the moment, the pair on general moving the most, and then the pound kiwi, and then the pound Aussie. Not necessarily in terms of pips, but in terms of money we can extract from these movements. Because indeed it's not the pips we are making which is interesting, but how much money we can make. And then we establish also every week some pairs we suggest for every day of the day, for every day of the week. And so, for example, today, the pair we have suggested to check was the pound US dollar, the pound CAD, the pound yen, and the pound kiwi, and we should have written here pound kiwi or pound Aussie. And you have seen that to increase the difficulty of today, I have chosen the euro US dollar. But when we consider the pound US dollar, we can also consider the euro US dollar, in fact. And so these information are freely available. You have some explanation on how to exploit them. So they are freely available, and so you can check every Saturday so for the update of this page. And somewhere on the website you can even subscribe for free. So here, for example, if you want to be informed when the page is updated, so you can set your first name, your email address, and you will receive an email for a notification. And so you can use this information to help your trade. And we have also what I call the max price levels. Let me show you what I mean by max price levels. So let me open, for example, the pound US dollar here. On the 5-minute time frame, you see several horizontal lines in white, in orange, or in other colors, red, magenta. So these are price levels I define every weekend. They are supply and demand levels, and so I update them every Saturday. So these lines have been defined last Saturday, and we can see when we check on the past, for example, how yesterday the price has nicely respected these two lines, and when the price has succeeded to break up the orange level, the price has moved nicely to the upside. And again, the price is stuck between these two levels today. And look how these two levels were resistance to the upside, how they were support here, how they were resistance here. It's really amazing to see how the price starts or stops on these levels. And so look here. And they have been defined 1 week in advance. Okay? And so you have that for not every pair, but for many of them. What I do is I define these levels for around 15 to 20 pairs, depending on the conditions. So coming from the top 10 pairs list. I include also some indices like the S&P 500, the Nasdaq, the Dow Jones, the DAX, the FTSE 100. I also consider gold, I consider crude oil, I consider also the Bitcoin, even if I don't like to trade cryptocurrency. For me, it's a nonsense to trade cryptocurrencies. But on the demand of our members, I have included the Bitcoin. And so globally, around 30 instruments. And they are not free, of course. There is a subscription to have them, but we have two formula. One free formula, and so a free subscription is a subscription to have the levels of 4 pairs, the Euro US dollar, the Euro Aussie, the Aussie yen, the pound yen, and there is a small monthly subscription for the entire set of the instrument I have mentioned, so around 30 instrument. And if you want to have some information about this level and how to get them, you can always send an email to Craig. So I think Craig has given his email in the question area or in the chat area. Otherwise, he will do that again. And so you can contact him if you want some information, so additional informations. But there is a free formula also for just 4 pairs. And I prepare them, yeah, okay, Craig has mentioned, not max trades for you at gmail.com, but max trades for you at gmail.com. MAXTRADES for you at gmail.com. So there is a small typo in the max trades for you at gmail.com. Now that's correct. So send him an email if you want any information about our courses or about these price levels. So, any further questions? I'm going to quickly go through the question area, and I think I have answered so all the questions. Yeah. Some is asking where can I find a guide on how to merge the price levels template with the primer template. There is a script we use to merge the levels to the pairs you want to trade, and so this script is sent to you when you subscribe to the levels. Let me show you how it is made. Let me first of all close these two expert advisor MTM. They will not pollute the chart. So, and I will take one pair, especially just to illustrate the process. So templates, and I will take, for example, here. Let's consider the pound Swiss, for example. I will just change the name of the template to see it at the beginning of my template list. So what we have is we open, and I have to add the symbol here. So just a moment, symbol, pound Swiss, show, close. So we open a naked chart of the pair, okay? And then we apply the template with the levels, pound Swiss. So we have the template here. And then we have a script you can receive. Of course, you will receive copy object. And so when you apply that script to a chart, let me open a chart with our Max Primer template. So chart. So you see here we have the template, the Max Primer template. Now let's come back to the naked chart with the levels. We applied that as copy object script to this chart that way, and then you can close this chart, and normally all the levels will be copied on the chart with your Max Primer template. Yeah, this script is for all the levels, Sam. It is not only for the free level, but for all the levels. Okay. And so if you don't have that script, normally the script is in the Google group for the free max price levels or the paid max price levels. So you can download from it, or you can contact Chris or Craig, and I'm sure they will be glad to send you the script. So yeah, Sam, no problem to read them. Guan asks, go through the divergent and fast bias in pound yen. Some of the bottoms in between are not divergent in. Yeah, but it's not a problem, Guan. Let's come back here to the pound. It was the pound yen. Pound yen here. So when do we have, in fact, a divergence? When we are in a downtrend and the price is making lower lows and the indicator is making higher lows, we have a divergence. But of course, all the in-between lows, if they are not lower lows, they can be ignored. So we may have any in-between higher low, it doesn't matter, okay? What we have here, we have that low here, we have that low here, we have lower lows, and we have higher lows in the indicator, okay? But this is specific for this indicator. Of course, when we use the concept of divergence as exit techniques with, for example, our store RSI, we pay attention to have successive lows or highs for the divergence. But it is not the case with the fast bias. It is a small nuance we have with the fast bias. Okay? So if there are no other questions, so we will wrap up here. So I wish you an excellent weekend, nice trades next week. So, and I hope to see you in one of our future courses. So either the Max Primer or the Max Standard, which starts in a few days. You will receive information by Craig, of course. If you have further questions, don't hesitate to contact us. So you have Craig's email, so feel free to ask any question you would like to ask. So before making your decision. So okay, thank you very much, everyone. So thank you very much for your participation, for the time you have invested during this session. In the meantime, so take care. Bye, everyone.